Alright guys, welcome to the CRT 5 a.m. model full Forex course. And today's lesson we're going to talk about liquidity, right? What is liquidity in the market and why the price goes whenever they goes, right? It's because of liquidity. Okay, so in today's class we're going to talk about liquidity, that is the most essential part of this type of trading. Okay, we need to know what is liquidity in depth. In this video I'm going to show you what is liquidity. Okay, so before anything, don't forget to hit the like button. I notice you guys are not hitting this like button. It's very important. Okay, and comment down below like, hey Sky, I'm here. Okay, that I want to know if you are there, right? So that being said, let's jump into straight for our class. Okay, so no, I gonna no, right? No, right. What is liquidity? So you guys have wondered what is liquidity? Oh, okay, liquidity is like contracts and stuff. Okay, but you know how deeply liquidity works? Like providers of liquidity, players, retail traders, institutional traders. Why liquidity is the most important piece of the puzzle? You know about that? If you don't know about that, you're going to learn right now. So, first thing, what is liquidity? Right? And per se, you can say liquidity is contracts, right? That's not wrong. But liquidity is basically the counterpart of each contract, which means I separate this image right here, can illustrate better what is liquidity, right? So in this case, right here, we have some asset right here, and I want to take this book of orders so you guys uh, can properly understand, because I know that a lot of you guys never saw this particularly, but this is how a lot of traders negotiated daily, right? Only with the volume, because it's very useful. Okay, but the fact here, I know a lot of guys never saw this in your life, only see charts and candles and stuff, and you don't know how liquidity works, right? So right now I'm gonna teach you how liquidity works. So first thing, we have some asset right here, and we have the price, okay, of this asset. So you can see the asset moves from half to half point. Okay, that's not that big deal, but you see that in every level of price right here, every tick of that price, we have sell orders and we have buy orders right here, right? And what makes the price moves is the aggression, right? You see the asset is in this currently price right here, okay, and you having 20 people wanted to buy and 500 wanted to sell, right? So for the price comes up to this level of price right here, this 80 right here, okay, the buyers need to consume every contract in here. The buyers need to consume 501 contracts in the sell side, right? So this is how the price moves, right? So the buyers need to consume every contract in here in order to make the price moves up, right? And if for some reason, like, okay, I want to buy 2,000 contracts, okay, you will consume this level, this level, this level, and a part of this level. So if you just having 2,000 contracts, I don't know why, but you have 2,000 contracts and you hit the buy button, right? The price will consume this, consume this, consume this, and stop right here. So this is currently your price, and this is how market moves, right? And the same thing for the sell side. Okay, if sellers want to make the price lowers, you need to consume this, like 2,000 contracts. So you got to consume all this and this and this and this. Okay, yeah, I think this. Like the price is probably going to be right here. You see? So for in order to price move from one side to another side, we need to consume lots, right? And what happens if the price is moving up? Like not one guy just come here and just click the buy button and consume 2,000 lots. What if just the price just come up a little bit slowly, like mitigation movement, something like that, like the robots, the algorithm is moving the price, because you have to understand that once you have like a structure like this, okay, this is the point that market makers actually inject their lots in the market. And this middle part here is most likely or stops of the retail or just high frequency trader, like that little robots, the liquidity providing robots that makes this movement right here. Okay, but anyway, so you need to keep in mind that the big players lots are in the extremities, like in highs and lows of the market. Okay, right. So said that, if the price just is moving slowly and graduating, and some guy who has like 20k lots just come in here, and like once the price consume 500 here, they put more 500 and put more 500 and put more 500, and don't let the price break through this. You know what this is? This is called iceberg. Okay, iceberg order, because you can see this order in the book. Okay, and yes, you have softwares can do this shit, right? But the fact is, this is called iceberg orders, right? And this is how the manipulation movement occurs, right? This is how you stop a manipulation move. It's with iceberg orders, right? And I'm gonna explain you in 1 minute. Okay, so let's see. In sorry, right here. Okay, let's see right here, right in this price right here, and I'm gonna paint it yellow, right? This price is an old high. Okay, so you have a high right here. Okay, so you have two types of player in the market, like dumb retail, like really dumb retail, and you have like a smart retail. Okay, and the real dumb retail, it's going to see this level right here. Okay, and once price pushing up, okay, this really dumb retail, it's gonna click buy right here. So the really dumb retail gonna go long here. Okay, and where is this order of this dumb retail? It's right here. Okay, because it's a stop order, and stop order, it's a limit order like this one, right? But if the price are like here in this level of price, all of orders here appears to everyone, so it's limited orders, and all the orders from here to above doesn't appear, so it's called stop orders. Okay, it's like a limited order when you put you on your platform. Okay, it's not going to the books straight, but it's on your platform. Once price hit this level right here, the platform will trigger this order instantly for you. Okay, so this is a stop order, right? So the real dumb retail put their stop order, buy stop order right here. So once the price breaks through, he gets long. and oh my god, this price is going to the heaven, right? And yeah, but you have so one stop order here, and probably the stop of this done retail trader is right here. Okay, so keep that in mind. Now we go on to the second scenario. You have like the smartest retail trader. The smartest retail trader going to see this level as a resistance level, right? All of you guys are heard about resistance and support and all those shits, right? So the retail smart trade, he knows that he needs to sell right here. Okay, he knows he needs to short right here, but he shorts like he put the her limit order right here with this bunch of orders right here. Okay, and what happens is once you have sell order, you need to have a buy stop for take profit or for stop loss, right? And in this case, let's say the stop of this guy is right here on this level, right? So let's recap. You have a stop order right here for this guy who wants to short here. You have a stop order right here from the first guy who wants to go long here, right? And plus, you have the stop order from this guy right here who want to go long here. So what happens here? The institutional, the market makers knows about that, okay? Because it's classic, okay? So what they do? Just throw a little rock right here and let the magic begins. So they push a little bit of contracts right here, okay? And let the magic begins because once we hit those limited orders right here, the price will consume all those lots right here. You see? Because you have not one, but you have a lot of them retail traders, right? So the price will consume those orders. And suddenly the price will hit here, okay? And the market makers push a little bit further from here, right? So the price activate now this stop orders right here. And activating these stop orders from the smart retail trader that's short right here, the price consumes a little bit of lots, okay? And how they do to make this price stop? Iceberg orders. They inject orders at the level they want, okay? So let's say we have 15K, this is like 20, like 15K orders right here, stop, okay? And you have like this in the book. So if you just trigger this 15K orders, the price goes to the moon and the market makers cannot enter the price in the price they want, right? So how they do to use this 15K, sorry, for enter? They use all this liquidity has been provided by dumb traders right here, okay, to set up his position with iceberg lots, you know. So let's say we trigger a 15K lots, we need to fill those 15K lots with sell orders, right? Because if we not do this, price goes to the moon and the market maker cannot make his position, right? So this, guys, my little padawans, this is the formation of the order block because you have a block of orders right here, okay? And let me draw you a thing for you guys. Oh my god, I just erased the image. Let me draw you a thing for you guys. What happens if the price comes to a level, suddenly have a lot of orders, right? And this price returns to another level and make like this. What do you see here? You see a candle with a wick, right? So this is the reason the best order blocks have a wick. The best order blocks doesn't have a body. Like, you can have a body, obviously, but probably a time coincidence. But if you see this large wick on the candle who form the order block, the candle who manipulate the price, that's exactly what happens. Market makers are filling those books with orders to stop the price from this dumb money right here, trying to push price higher with their stops, her dumb stops. Okay, so this is basically how liquidity moves. Okay, and after the market maker make his move right here, he's now positioned. He's now like shorting 15k contracts right here in this price, right? And where in the seventh house I going to dump this 15k contract that I have because I'm shorted in 15k. Okay, so what can I do? I'm gonna short a little bit more here. Okay, I will short. So I short here, short here, short here, short here. And remember that like smarter retail trader, he their stop are here. The smarter no dumb retail because they're long here and their stop are here. Remember? So now they're going to use this stop to accelerate the price. And this phase is called distribution. They're using the real dumb money to accelerate this price right here with those a lot of stops right here. Okay? And this make the distribution movement. But anyway, they still have a problem. We have 15k to dump in somewhere because okay, you short, you open your position, okay, you short your 15k at the price you want, right? But I need to move this price to somewhere. Where the fuck I gonna move it? So you trigger the distribution movement, and then you're gonna dump in the next high or the next low. In this case, let's assume that here it's a low. Okay, and a low, and in a low, what do you have, guys? You have the same situation that you have in a high. You have the dumb retail, you have the smart retail, you have all those liquidities waiting for this guy dump his contracts in an old low or an old high. So this is what I talk about liquidity. Okay, because liquidity is the base of everything. Okay, and I give you a free lesson of manipulation, institutional manipulation right here. But this is how the market moves, right? So they dump his 15k at the next low, in the case the previous low, right? So let's make this a real example right here that I want to give you, right? Okay, so here we can use this. Okay, you see that you have a double top, like retail loves it. It's a real strong pattern and all those shits, you know. So you have what here? Liquidity, dumb money trying to go long from here, and dumb money trying to short from here because it's a resistance. Okay, and the other is a breakout. Fact is, you have a lot of stop orders right here. you have a lot of stop orders right here. Okay? Why this shit's like this today? I don't know. Anyway, and okay, let's assume that that guy made his move and now manipulates the price right here, took all that liquidity, and now he's positioned, right? Remember the distribution? It's a fast movement, fast movement. They all stop out, everyone who tried to long here. So the price, it's going to stop out everyone here, all right? And the next liquidity, and you can see right here, is this one, right? And I'm gonna mark this one because you have the same fucking situation right here happening, okay? But in this case, we didn't manipulate to go higher. We just used the stops from this region to accelerate the movement from the downside. You see, we get this liquidity, we realized the profit right here. They made the profit, right? This guy right here dump off all the contracts right here. So we have this reaction of the price right here. Okay, so this bounce of the price. And then they push price lower because they know that gonna have a lot of stops right here. And the price, boom, accelerates again because of a lot of stops orders, right? So for this lesson, guys, is basically this. Okay, this is the most essential part of liquidity that you need to see in your life. Okay, and this is how the market makers move this market. Okay, and remember that I said the market makers are in the extremes. So here you have the market maker actuation. Here you have it, a market maker actuation. But here, like here in this, is just the high frequency trading. Okay, it's just robots, it's just algorithm right here. Right in this leg right here, this leg right here is just robots, and this is the reason that we don't want to get anything done in the middle. We need to wait for a key level. Remember, I always say about key levels. Key levels is the old highs, old lows that are liquidities. Key levels are liquidities from the market, guys. Okay, we're gonna dive into the key level lesson, of course, but we need to actuate just in the key levels, just in key levels, because theirs is where liquidity is, and the market makers are putting their money on it. Okay, so sleep with that. And one more thing, if you're not in the Discord community, you're wasting your time, you're wasting your life, and you're wasting your money because that community is growing and you need to participate. Okay, we have the live room, we have the swing trade room, we have the community room, and it's all for free. Of course, the live room and the swing trade room is free for 3 day of trial, so you can have your 3 day trial and experiment the room, live room, and swing trade room. And after that, you're gonna pay a small fee to continuing. Okay, but the community is all for free and you can join anytime. I will leave the link, the Discord, in the description, so make sure you join. Okay, and be safe. I see you in the next video.